All right, guys, back to work. Weekend is over. Hope you guys had a fantastic weekend. We got one more week left of March, one more week left of the first quarter of 2024. Let's do our jobs and finish up the month here with some more green this week. Boy, markets are choppy today. At first glance, it might seem a bit difficult to find winning trades tomorrow, but I see three clues, pretty obvious clues on these charts right now, giving us an easy roadmap to make some money on Tuesday. We'll cover those three clues in the video tonight. We'll talk about my favorite trades here for tomorrow. I want to make sure you guys have a roadmap to make some money tomorrow as well. Before we jump in though and talk my favorite trades for tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out, give me a holler down in the comment section below. Thank you so much for tuning in, supporting the channel. Enough of the intro though, I'm a couple minutes behind schedule. Thank you so much for tuning in, sticking around tonight. Where are the best winning trades for tomorrow? Boy, charts are all ready. The Nasdaq triple Qs are ready. Got the S&P and the SPY is ready. I see three important clues on these charts right now that I think make it pretty obvious where the best winning trades are going to be for tomorrow. Two of those clues are right on this 60-minute chart in front of me. We have a bullish overall market with a big move going higher. A bullish overall market. We're bullish overall on the S&P, bullish overall on the Nasdaq, and a big move off the FOMC last week. Now, first of all, whenever we're bullish overall on the 60-minute time frame, that tells us the best overall direction. It gives us our directional bias where the best odds of success are for tomorrow. So we know what direction to focus on. The big move, though, is a very important clue because big moves tell us this pullback we're seeing right now is not a bear market. It's simply the market trying to pull back to attract more buyers in nice and low. At the same time, it's pulling back slowly to trap in some inexperienced sellers who are looking at this over the past couple days and thinking this now is a bear market. So again, two really important clues. We're bullish overall. We're going to focus on the long side. I have a couple short side trades I'm tracking for tomorrow. We'll talk about that as we go deeper. But again, the big move is really important right now because the big move tells us do not confuse this sleepy, lazy pullback right now with a reversal. Right now, the market's trying to pull back lower to attract more buyers in, and most importantly, trap in some sellers to squeeze those stops as we make our way back up to retest those highs. So two very important clues, but I have one even more important clue on our tick charts we'll talk about in a moment. But before we do that, though, and drill down to tick charts and talk entry tactics for tomorrow, let's double check our schedule for tomorrow because there's two big news events I have on my radar, and I want you to keep in mind as well. The first one tomorrow morning, of course, is the durable goods orders at 8:30 Eastern Time. Later on in the session, we have the consumer confidence number at 10 o'clock Eastern Time. Now, durable goods is probably the biggest news of the day tomorrow, at least that we know of, but anytime I have a red star news event at 10 o'clock Eastern Time, you always want to pay attention. So hopefully durable goods will give us some fireworks at the beginning of the session tomorrow morning. But again, if I had to guess tomorrow, I would guess around that 10 o'clock consumer confidence number will certainly be our biggest catalyst of the day. We oftentimes find our best trades each morning around that 10 o'clock. We call it 10 o'clock shock every morning in our trade room. We are going to the end of the month, end of the quarter later on in the week. We'll talk more about how the end of the month and the end of the quarter plays into our game plan. We'll talk about that later on in the week, so make sure you tune in for the rest of the videos here on the YouTube channel. But back to our charts, though, because it's good to know when the news is tomorrow. But hopefully by now you know, right? The money is made on the charts. Let's now cover that final clue, right? I mentioned three important clues. Two of them are here on the 60-minute time frame. Let's now drill down to our tick charts, right? Tick charts make everything easier, and more specifically, tick charts will help us time the best entry because we don't trade off time charts in our trade room. This is a 7,000 tick chart. You'll see linked up there in the upper left-hand corner. And if you're watching for the first time right now, welcome aboard. This is the 21 EMA. It's one of the most important indicators we use every day in our members trade room. Now, there's one more important clue on the E-mini tick chart, and that, of course, is that trading range, a bear move into a trading range. Now, if you're taking my free video classes right now, you know how ranges work, but if you haven't done so already, ranges are magnets and they love to rotate back and forth. Because we're overall bullish, right, on the 60-minute time frame, I would love to look for some bear traps underneath that trading range. And if we're lucky, we'll get a breakout into a pullback, right, of that previous trading range. So ranges, they love to rotate back and forth. Again, they're magnets. We talk about this a lot in the free video course. And because we're overall bullish, there's a greater likelihood now for a breakout, right, and a pullback off of that trading range. So it's pretty easy to see, right? You put all these clues together. I would love to get some bear traps down below that trading range because ranges love to rotate and we're overall a bull market. I have 3 different entry patterns we'll talk about for bear traps. But first, though, I really like the idea here now of what we call a rotation off the low. We're overall bullish. How would we trade a breakout into a pullback? Let's do that one first, and then later on in the lesson, on the Nasdaq, we'll talk about those bear traps down here because I would love to get some bear traps as well. Now, if we do get that run going higher, we have to remember that ranges like to rotate. So it's not a guarantee if we go up, we're going to keep on going. So it's really important that we look for actually 2 distinct type of kind of breakout pullback entry patterns. For example, in the free trading course, we talk a lot about bear traps, right? So if we do get a strong run going higher, I'm going to be looking for one very specific entry pattern on the breakout. It will need to exceed what we call the pendulum swing. We talk about this, of course, in our free video classes, but the amount below the range can project above the range. I'm going to want to see us get through that pendulum swing with quite a bit of certainty. If I can get that breakout going higher, I always like to look for this pattern. Strong breakout, shallow pullback, and a higher high in price. That sets up for what we call a bear trap pattern. There are a lot of examples of these inside the free trading classes. These are called bear trap patterns. It's a higher high in price. I want to buy as low as I possibly can. And to do that, I'm going to do it with a bear trap pattern. Now, once we get up top around areas of resistance, and be aware, usually it's a measured move. 1 leg, 2 leg for your measured move, right? That will give us an idea of where those targets are going to be. If we can get that bear trap entry, we now know breakout leg, measuring leg. We know where that market wants to go. Once we're taking our profit up here, we don't want to buy high anymore. Now what we're going to do is look left and think about what the overhead levels of resistance were and use those now as a key area of support for a breakout pullback. What I always do is try to line up some channels, right, off these highs down around that low and combine where we had the top of that range, combine that now with the low of that channel. Now, you know me by now, I don't like to pick bottoms. For all I know, it'll keep on going all the way back down into that trading range. So I'm not a big fan of picking the bottom on this. What I'd rather do is wait for that breakout pullback. Don't pick the bottom, but let's see if we can get some sellers to come in and try a couple times. And I'd like to use what I call a 2-try failure pattern. It's very simple. Let those bears try once, let them try twice, because then now they're trapped. Now we can use their stops to fuel that move going higher. Now watch closely because we can oftentimes get a failure pattern into either a pullback pattern off the 21 EMA. If it does start to really punch and go higher, I'll look for that trap pattern once again. What was it again? Strong move, shallow pullback, higher high in price. And again, that bear trap below that low. Now, like I mentioned earlier, measured moves are a big part of this. So the size of that breakout leg becomes a measuring leg. Pin that down around those lows, and that will give you now an objective for us to use for our final target. And again, later on in the video, we'll talk about some bear traps going lower here as well. But if we do go higher, though, this is definitely the game plan I would like to look for here for tomorrow morning. It's a bear trap on the way up, and then once we reach that kind of measured move up there, we take our profits, we don't buy high, we then wait for that breakout pullback. When I say breakout pullback, it really is a pullback to the breakout pullback zone, top of that range, but we don't buy the low. We trap the bears in, use their stops to fuel, and this could be really anything. It could be a failure pattern like I'm drawing you here, a failure into a bear trap, a failure into a pullback, any of the entry patterns you guys are learning and making money with inside the free trading course. Now, let's slow down for a second, because I know that most of you guys and gals watching right now, you've taken my free video classes, you know how to trade traps and failures, breakout pullbacks and bear traps. You know the stuff. You're making money with it already. But if you're watching for the first time right now, this might be way over your head. This might be a brand new language we're speaking here right now on this video. But don't you worry. I teach all of these entry patterns. I have hundreds of examples of traps and failures. Everything's taught in much more detail in our free video classes. I'll put a link up top here for you, upper right hand corner. Grab that link and take that free trading course, because the strategy I teach in that short video series will teach you a stupidly simple trick we use every morning in our morning trade room to know exactly where the best trades are going to be that day. Then once we know where they're going to be, we time the entry with 4 different entry patterns. I want to help kickstart you making money on your own. If you're missing the best trades each day, if you're struggling with too many losses, if you're not getting the results, the markets are way too good right now not to be doing well, hit the link up top there, hit that link, take that free trading course. It's perfect for someone trying to make the jump into full-time trading. And also be aware too, if you can't grab the link up top there, I'll put all the important links we talk about tonight the description of the YouTube video. I'll put the free class links down there. We trade together every morning in our trade room, 8 o'clock Eastern time. I'll put all that information in the description as well. Also, too, I'm on Twitter. I post a lot on Twitter throughout the day. If you're on Twitter, give me a follow. Again, all the details in the description here below on the video. But now you know what a breakout pullback might look like here for tomorrow. But hold on one second. Remember, ranges like to rotate, right? So is there any way I could short up here? There definitely is. Because again, I think the best trades for tomorrow are probably going to be bear traps down below that low. And again, we'll talk about that in a moment here on the NASDAQ. But how would I short something like this? Well, first of all, it's important to remember we're an overall bull market. So whenever I go against the overall direction, the 60-minute time frame, I always use smaller size whenever I'm going against it. So half size position, quarter size position, right? You get the point. Go smaller size against that overall trend, go full size position during the best trades, go with that trend. There are 2 different ways I can short this thing off the high. The best one is called a crown reversal. We'll go up. Remember, we need to get through this pendulum swing with quite a bit of conviction, right? I want to go through that area and then start pulling back from there. If we go up into that area and we don't continue going lower, if we begin now to see the buyers come in and try once to keep it going higher, go lower, try twice to keep it going higher, again, we're not seeing this thing. It's not breaking out, shallow pullback going higher, right? It's not giving us a pattern for a bear trap going higher here. No, it's running into resistance and the buyers are trying, but they're struggling. When that happens now we know where their stops are. Now we know where the buyers turn into sellers. If I'm stuck long up there and I get stopped out, only way to run is to sell my way out of that position. Now, we're an overall bull market, which means I have to make sure I'm selling as high as I possibly can. And to do this, I'm going to use this crown reversal pattern. I call them crown reversals. They're basically one big bull trap off the high, Buyers once, buyers twice. And why twice? Because we need to have the stops sitting right there to fuel that move going down. When I'm going against the overall trend like that, I need to have stop losses to give me momentum, right? To power that reversal back down again. That is one way in which I can grab a reversal off the high. And remember, ranges love to rotate. Mark the amount above, mark the amount below. That will tell you where to take profit. It will also tell you where to look for those bear traps we'll talk about in a moment on the NASDAQ. There's one more pattern, though, in addition to that crown reversal. Again, it's that lower low in price and a trap above that high. Lots of examples inside the free video course of that. Now, sometimes what happens is, sometimes we go up, and it looks good, right? Sometimes it looks great going higher, but before I can get that bear trap pattern, right? Higher high in price, before I get that bear trap pattern, and before I get a crown reversal, it just gets whacked right back down again. Okay, I'll be honest, these are not my favorite trades in the world. However, my job right now is to visualize what my game plan is for tomorrow. So I better be ready for anything the market can throw at me. I would rather have a bunch of tools in my toolbox. That way I'm ready to go no matter what. So although this is not my favorite trade in the world, it is something to look for here for tomorrow. If we get whacked back down again, where does the market want to go? It wants to rotate all the way back down, roughly about the same amount as it goes higher. If we get whacked back down and we start grinding, okay, easy giveaway. Now watch closely. Mark off that low trend line, up around the high now, and then look left, right? Look left, find a prior swing. And my goal is always, I want the first test off the high of that channel. My favorite trade on this is a bull trap, like I'm showing you right now. We don't need a bull trap. It's my favorite though. If not, it could be a failure pattern above the moving average. Buyers come in, try to buy the pullback, use their stops for fuel with a failure into pullback combination. This will all make a lot more sense once you get through my free video classes. But the bottom line is, if we run higher here, don't blindly assume this thing's going to keep going higher. Because again, it's a range market. It may want to rotate back and forth here. If it V-tops off that high, watch that V-top and that grind going lower. Once you see the grind going lower, bingo. Now you know what to do. Draw a trend line at the low, bring it up around that high, and then don't miss that first test. As we always say, first test is the best test. Get a bull trap, get a buyer failure, and leave that runner back to retest those lows and that pendulum swing going lower. That's how I'll trade a breakout pullback. That's also I'll trade a fake out breakout going higher. Now let's talk about some more good stuff. One of my favorite trades here for tomorrow if we go lower. Let's now go to the NASDAQ. The NASDAQ is very similar. There'll be a slight difference in the S&P and NASDAQ, and we'll talk about why I say that and why it's important here in a moment. Over on the NQ, again, there's no doubt about it. We're definitely bullish overall. The NASDAQ's a bit choppier than the S&P, but we're definitely bullish overall. That is our directional bias, and that big move, like I mentioned before, that big move explains to us why this thing's been so choppy and pulling back, because again, buyers are trying to get in at the lowest possible price. We're also trying to rope in some bears here right now and use our stops to fuel this move back to retest the high. Now, over on the NASDAQ actually has two more additional clues here. One, of course, is this bullish trading range. Now, we know this mostly because of the S&P before. What do ranges do? They're magnets, and they like to rotate back and forth, right? So obviously being a buyer underneath that trading range is very desirable. Think bear traps below that trading range. And of course, because we are bullish into a trading range and bullish overall, it's definitely more likely for a market like this to break out, right, and pull back, right? A breakout pullback is definitely something I have on my radar. Now, we went over all this on the S&P, right? We know how to trade. We know how to trade that bear trap on the way higher. We know that usually we'll make a measured move to tell you where to take your profit targets. We know that we're not going to buy up here. We look left, find those prior highs, wait for that pullback. We don't pick the bottom. No. We don't pick the bottom. We don't have crystal balls. We wait for, right? We wait for that. Crystal ball sounded a bit weird on that one, didn't it? Right? We wait for those 1 try, 2 tries here. What kind of channel is this after all, right? 2 try failure. And then of course we got that failure pullback, right? And go from there. Same basic stuff we talked about on the S&P a moment ago. And again, if they go higher and they struggle, watch that crown reversal pattern. Watch that pop up, that V-top, and that pop and grind, as we always say. So anyways, very important clue there on that range. There's one big elephant in the room right now in the NASDAQ, and that is that big, strong run down. Now, in our free video class, we talk about anytime we see a strong move in one direction, we always expect a pullback and a retest of that level. Anytime we see a strong move in one direction, we expect, in this case, the bears to try to retest that low. Now that really throws a bit of a wrench in my game plan for a bear trap down here, because it may not be that easy. I have to be a bit careful now buying the low of that channel. I can't be that aggressive now on that bear trap. Why? Because again, that strong move down is going to try to drag this thing down and then back up from there. So knowing that, I definitely have my eyes on some bear traps here, some bear traps here, and some bear traps here. But these 3 locations will give me really 2 different types of entry patterns based on that strong move going lower. Let's talk about why I say that. For example, as we go lower here, I would normally look for what I would call a 2 try failure. So bears once, bears twice, right? And trapping those bears and up from there. And that may end up being a good entry for tomorrow. But with that strong move down though, I have to think the bears here are going to try a little more, they're going to be more difficult. They're not going to be as easy to run over as they would be if we didn't have that strong run down. So because of this, if I get that move going lower, I'm going to go out and look for that same, remember that crown reversal pattern we talked about earlier where the bears try once, the bears try twice. I now want that bear trap to get in as low as I possibly can. That way, if we end up running up and then running back down again, take out that low, I will already be in the green on that trade. So it's very important that when I have a bull range like this, I can, yes, look for that buy off of that low right now. I love that trade, but I have to respect, again, the strength of that move lower is going to try, right? They're going to put a big fight here right there at that low. I want to make sure I'm buying as low as I possibly can. And to do that, we call these buying shallow pullback traps. This is a relatively shallow pullback in comparison to that big low at the low. I want to get a bear trap pattern right now, a bear trap pattern to buy as low as I possibly can, right? Now, as it goes higher, as the market tries to rotate, right, running higher here, we know where the market wants to go. It wants to take out that pendulum swing. How would I get in during that rotation? Well, anytime we rotate out the low of these ranges, we look for those pullback combinations. We look for those bear traps on the way higher. So I would say right now, if all we get is a shallow pullback off the low of this channel, I have no problem taking it. I got to buy as low as I possibly can. To do that, higher high in price, trap low. Higher high in price, trap low. That's the name of the game if I don't get that run back down to retest the low. Now, if I can get that run back down to retest the low now this is mission accomplished now for the bears, right? If we can get that run all the way back down to that low, now this becomes one of those double bottom reversals we talk about a lot so much on these videos, right? Whenever I see a bull market overall and I see a strong bear move down, if I can get a retest of that low, that's mission accomplished now for the bears. Buyers will jump all over this and make a run back up to retest the high, right? That double bottom is very, very desirable. So strong move down, if I can get even remotely close to that low right now, it could be here, really anywhere in this lower area on that chart. If I can get this thing overextended into this low, this is exactly where a two-try failure, bears once, bears twice. I'm not so worried anymore about buying too high now, right? Now we're back down around the lows now. Who's selling down there, right? Who's short in that area right there? Not professionals. These are rookies. I can be a lot more aggressive right there than buying that shallow pullback I mentioned before. Now, there are lots of variations of these. We talk about, of course, in our video classes, but one try, two try. I want to rope in those bears. Again, I do not have a crystal ball. I don't know if it's going to be here. I don't know. What I do know, though, is it's a horrible spot to be a seller. If I can get bears trapped in there, I'd love to get that two-try failure, buy into those stops, and then where's the market want to go? It wants to go rotate all the way to the other side of that trading range, and now we trade the turn. We go find that bear trap entry we mentioned before, that higher high in price. We buy as low as we possibly can, and the goal, of course, again is bear trap, failure pattern, a technical bear trap, higher high in price, triple low. We have to go back to retest the high and leave that runner, right? Leave that runner for that run back up. I love that trade right there. Now, a couple things to be aware of. Sometimes what happens is, sometimes we'll get that strong run down. We'll go out and we'll get that entry, right? We'll get that strong run down. We'll get the entry here. We'll trap the bears in once, trap the bears in twice. We'll get the entry and we'll run higher. But oftentimes, whenever we see a strong run down like this out of a range, oftentimes they're going to hold the underbelly of the range. This could be a breakout pullback area for the bears. So lots of times in our trade room, we'll get that failure. We'll get our 1-to-1 first target. We'll get rid of the risk on that trade. Stop moves up to point of entry, but we won't be able to get that follow through and have it keep going. The market will then come back down and retest that low, and we can do it again. Okay, do not confuse a double bottom like this, a retest of that low, with a reversal. If it retests that low, do it again. And in fact, these are my favorite types of trades, because now anybody who sold short on the breakout pullback, they're taking their profit down around that low. So do it again. Trap them once. Trap them twice, again twice, because I need those stops to run to fuel the move going higher. And once we do get that stop run, think about now that bear trap on the way back higher. Again, the goal is we're an overall bull market. I want to look for bear traps at all the support levels underneath these trading ranges right now, right? One last variation on this, if we do end up running lower and V-bottoming off that low, sometimes we don't get the entry down here, right? Again, not my favorite trade in the world, but my job right now is prepare for one of the most common scenarios, and one of them, again, I would love to go down, trap them in, and back up again, but if they V-bottom off that low and boing right back up again, it's that same V-top pattern I mentioned earlier. If it pops up and grinds higher here right now, we know what's going on. Mark off that high, mark off that low, and as always, find those prior swings and grab any of those entry patterns, right? The failures, the trap patterns off that first test, off the low of that channel, that V bottom reversal up off the low. All right, guys? So recap here once again, we're bullish overall, but bearish clues right on the faster time frame. Get those bear traps off that low, or those breakout pullbacks going higher. And remember, if we do struggle up here, watch those crown reversal patterns we mentioned on the S&P to finish off the retest of that low. All right, guys, that's the plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade it with me. The easiest way to start making consistent money in the markets is to learn and trade along every morning in the trade room, 8 o'clock Eastern time. I'll put all the important links tonight in the description of the video. Any questions questions, comments, concerns, call the office, use live chat. We're always here to help out if you want help along the way. Hope you learned a bunch tonight. Hope you use this knowledge to earn a bunch tomorrow. And hopefully I'll see you sometime soon. Trade along with us. Find and winning trades with us in the morning trade room. Meantime, be well, be nice with her out there, and be here next time. Adios, amigos. Bye for now.